City of Medicine Hat sitting on natural gas reserves. Apparently Rudyard Kipling called it the city that has all hell for a basement. It's been called Gas City. They've long been producing the stuff, but they're now going to turn off more than 2,000 of their wells. We're joined by Brad Maynes, Commissioner of Energy and Utilities for the City of Medicine Hat in Alberta. Thanks so much for coming on the show. Give us the background. I mean, you had some fairly serious production, north of the equivalent of 6,000 barrels of oil equivalent a day.
Yeah, good morning, Andrew, and thanks for the interest in the story. Yeah, actually, our production 4 years ago was almost 10,000 barrels a day. So as the gas market has been deteriorating over that period of time, we've actually been divesting of non-core assets and really bringing our business focus to the profitable assets in our portfolio. So right now, today, we're about 6,400 barrels equivalent of production. After the shutdown, we expect over the next 3 years, that'll drop down into the 2,500 BOE equivalent.
And do you run these wells yourselves, the city?
Yeah, actually, the city, with over 100-year history in the business, we actually predate the province of Alberta.
Huh.
We actually, we produce the vast majority of our wells. Almost 85% of our wells are operated by us.
That's interesting. A government-owned oil company, or oil and gas company. That's kind of anathema. I won't get into all that, don't worry. So you will still have some oil and gas production, though?
We will, yeah. So we'll have it's actually our oldest producing field. It sits just to the north of the city, and it's now been producing for over 100 years. It's still profitable down at the levels that we're seeing in the spot market today. So we expect that field will continue to produce. In addition, because of that long legacy of production, our distribution systems for our residents and our businesses here in the city are intrinsically tied into some of these fields. So we want to ensure that as we shut down our unprofitable operations, that we still maintain that supply that the residents and businesses are so used to.
I mean, the numbers are quite stark. I see the Calgary Herald estimates that your cost about $2.78 per 1,000 cubic feet. And we've seen the AECO price in Alberta drop below $1 lately.
Yeah, we actually saw negative pricing at some points here during the last 2 years. And it's very regular that we'll see 38 cents, we'll see 50 cents. And with that cost reduction, and I can absolutely attest that we've done everything we can to drive that number down, but it's shallow production, it's late in life, labor costs, all that. It's really hard to make money at these levels. And unfortunately for us here at the city, as we look at the long-term pricing for natural gas, particularly in southeast Alberta, we did not see a period of time where we thought there would be sustained pricing in the neighborhood that would put us in a profitable region.
How many jobs do you think will have to go?
We're going to do everything we can to avoid significant job loss, but shutting down that much production and those many fields will have an impact. We currently have over 100 staff, both a combination of office and field, working on these assets. We expect at the end of 3 years that number will be somewhere between 25 and 45 individuals. So we're talking 50 to 55 positions over the next 3 years.
A while back there, you had to pull the plug on a big solar facility as well. That was just hard to make that one work in terms of costs as well.
It was, yeah, but when we look back, we're very proud of that. We were very early in technology, into the renewable space, and we're very proud of that facility. But the technology evolves, and for us, the cost of operating the facility just was far greater than the revenue we were getting from it. So similar to what we're doing with our natural gas wells, we focus on profitability for our residents. The facility, hopefully, unlikely would have worked a little bit further south. We're just a little bit too far north for that particular technology to work.
And again, it was the low local natural gas price, I believe, that made the solar facilities economics so tricky.
Yeah, they just in terms of the overall gas pricing itself, but the price of electricity certainly helped with the solar thermal concentrator. It was just we were getting so little power out of it some days that just as the operating costs, it's quite an interesting facility if you would have had a chance to tour it. But the technology has moved on. We're very much hoping to repurpose that site. We're in discussions right now in terms of what that might look like with today's technology, particularly in the renewable space. We would like to move that forward.
Now, you did look into lithium. because parts of southern Alberta, parts of Saskatchewan are pretty good. Oh, sorry, helium, I beg your pardon.
Well, we actually look for both.
Yeah, sorry. But helium in particular, because I know people are working on getting helium out of that part of the world. It often occurs with oil and gas. You just found that the economics of helium didn't work for you because of the big investment needed?
Yeah, that's correct. There's certainly private niche players that are very active in the helium space in southern Saskatchewan, southern Alberta. So there's a field in Saskatchewan that's been producing actually, or was producing back in the 50s. So Saskatchewan particularly has a long history of helium. But for us, when we actually looked at the cost of the production facilities and the risk always of how much helium is actually there, for us, we thought it was beyond our municipal risk tolerance. But certainly for the private players, that are specializing in the area and are so actively drilling. We sincerely wish them all the best, and we hope that one day we'll have a processing facility here in Medicine Hat to further refine that product.
Brad, thanks very much for joining us today.
Oh, you're very much welcome, Andrew, and thanks again for the interest.
Brad Maynes, Commissioner of Energy and Utilities for the city of Medicine Hat in Alberta.